Welcome back, guys, to another YouTube video. In this video I'm going to go over the unicorn model. It's a bit of a lecture, so this might be a bit of a long one, but before I get started, the concepts that I would say that you need to understand are fair value gaps, swing points, and what an order block is. It will kind of help you understand why the model is what it is. In essence, a unicorn model is just pretty much a failed order block. That's what a breaker block is pretty much. And that's what we're looking for. So with that being said, check out any videos that I have posted on these topics if you don't understand them. So but with that being said, we'll move on to these 5 points. So starting from the top, we have time. So you guys need to understand what's the time of day that you're going to be trading. So for myself, to keep it short and simple, you have Asia's kill zone, London kill zone, and New York kill zone. You have the AM session and the PM session for New York. If you don't know kill zones, I highly suggest you do some research into kill zones. I'm not going to be going over that in today, but just for reference, we'll be using the New York kill zone, which is 9:30 to 12 before going into lunch. So that's time. So it's really important to understand the times of day you're going to be trading. Obviously 9:30 is the opening bell for the New York Stock Exchange. So that's when the most volume is going to be present. That's when the market opens. Trading in lunch isn't ideal because all the big guys have gone to lunch, so the volume can be quite low in lunchtime. Next point is going to be our higher time frame POI. So higher time frame POI is always going to come from your narrative time frame. So you should have 3 time frame alignments. You should have one for daily bias, one for your narrative, and the third one is your entry function. So let's talk about higher time frame. Let's talk about time frame alignment. So if you're executing on the 5-minute as your entry function, bias should be coming from the daily, narrative comes from the 1-hour time frame, and your entry should be on the 5-minute. Okay, so this is option number 1, option 1. And if I just copy this, you then have option 2. Option 2 is more noise, so say. Your bias comes from the 4-hour time frame, and your narrative comes from the 15-minute time frame for a 1-minute entry function. So take note of this. You choose one of these, and you do not mix these time frame alignments. If you're executing on the 1 minute, you should not be interested on a 1-hour POI. You need a 15-minute POI. Now, it's important to think by yourself, test this out, and you have to decide what you want to do. I do sometimes, if I'm using option 2, I do maybe look at daily bias or the 1 hour to see what structure looks like to kind of get an understanding. But it's important that you should not mix time frame alignments. So this is covering point 2. So I hope that's clear. We can remove this now. And then we're kind of going to be going into these 3 topics here, which are part of the unicorn model. So I'm now going to demonstrate what a bullish breaker block looks like in the form of swing points. A bullish breaker block, we first would highlight a higher time frame POI, assuming you already have a bias. Let's say you're bullish bias. You then drop down to your narrative time frame and you mark out a POI. This POI can be in the form of 2 things. It could be sell-side liquidity or a bullish FVG. Okay. I think it's also very important to understand that if you're below a swing low or in a bullish FVG on your higher time frame, we look for longs. With this in mind, let's assume price has now hit our higher time frame POI and has put in a swing low. It's now put in a swing high, and it's now put in a lower low. Price then displaces, putting in a swing high, and it has now left in this displacement a fair value gap. In this displacement leg, we would mark the highest up close candle before the leg down that created our stop hunt. This is a stop hunt. Assuming this, for example here, this is our breaker block. We would now mark this out as a breaker block with a fair value gap inside. We would then, at this moment in time, put a limit order at the top of the breaker block and a stop either below the breaker block or at the swing low. In this case, we'll put it here, and we can target 2R. We would expect price now to come back down to the breaker block and push higher to our take profit. This is an example of a bullish breaker block. I will now remove this off the screen and leave this here. Oh. We can put this then to the side. And I think it's quite important to put here, and I'll edit this, we long below swing lows or bullish FVGs. This is an example of a bullish breaker block. And I'll go into an actual example from today. But now what we'll do is we'll do a bearish breaker block, which is pretty much the opposite. So we short, as you can probably guess, above swing highs or bearish fair value gaps. Okay. So again, we go to, let's say we have a bearish bias, we go to our higher time frame POI, which is our narrative time frame. We then mark out a higher time frame. In this case, we can say a fair value gap. For this example, we'll just use a 15-minute fair value gap. This because it's just what I have saved. We expect price to come up to this 15-minute fair value gap on the higher time frame, tap into it, put in a swing high, then a swing low, a swing higher, and then displace lower. This would be our stop hunt. And our breaker block would be the lowest down close candle before the leg up that took liquidity. Before I go there, let's just say this displacement leg has an FVG aligned within it. This then becomes our breaker block, and it has a fair value gap within it. It has to have a fair value gap within the breaker block. We put our limit at the bottom of the breaker block in a bearish example, and the stop goes above the breaker or at the swing high of the break at the swing high, and you target 2R. We then expect price to come back up into the breaker block and then go to take profit. That is a unicorn pretty much summed up. Take notes of this. You need to have an FVG within the breaker block for it to be valid. You need all of these criteria hit before you can actually take this for it to be valid. So let's go remove everything and let's go into an actual example today on CL, which was actually lovely. So we can start at New York session, which is 9:30. We'll go to the daily. So for a 5-minute entry function, if you saw the beginning of the video, okay, we get our bias from the daily for a 5-minute entry function. New York open, well, price is here today. So where is price currently located? This obviously shows you the entire day current candle where it is now, but price was about here. So it's important to see that price is below these swing lows and it's below this swing low, and in fact we did not this low, but we did take this low. So this indicates to me we're going from external range liquidity potentially to internal range liquidity, potentially this high here. So we have a bullish bias. We then jump down to the 1 hour time frame. And I'm going to put on an indicator here so you can see New York, where New York is at. At New York Open, we are located in a bullish fair value gap. And we are also below a swing low. This now signifies that we can go to our 5-minute structure and look for a bullish breaker block. At New York Open, price does not show any signature at the minute on the 5-minute for a bullish setup. So we're just going to watch. Okay. After taking our high, I've moved the FVG one so we just have the sell side liquidity one, the swing low. After tapping into the sell side liquidity, which also is basically our stop hunt here, but I'm just going to mark this out because it's the same leg. This becomes our stop hunt. We want the highest up close candle of the leg before the leg down that took this liquidity. The highest up close candle before the leg down that took this liquidity, if I show you, we have, I count this as pretty much the swing point up here, swing low, swing high, swing low, and now we're getting displacement up. So that then means that this up close candle is our bullish breaker block. I'm going to turn off the session indicator just so it's a bit more clear. In this moment at a time, there is no fair value gap within the breaker block. We are building one. This is not one I would consider because it's not in the breaker block, this fair value gap, as you can see here. So we have to wait for the next 5-minute close. In this time, we now have a fair value gap within our breaker block. So we can mark this out. This is the first time we can enter this trade. Putting our limit at the top of the breaker, stop goes below the breaker block, and we can target 2R. If I zoom out and put the session indicators on, either of these highs are a good target. So we have buy side liquidity, buy side liquidity. These are great targets. So it's clear that I'm happy to take this. We're in the New York session, every criteria has been met. We can see what happens. This 5-minute candle doesn't offer anything. At 10:20, you would have been entered in this trade. We have suffered a bit of drawdown. We now tap into this 5-minute fair value gap. Back into it. Seems like we're respecting 50% of this fair value gap. Next candle, starting to come out of it. More displacement. We take our first objective, so you could take profits potentially here. Just missed this buy side liquidity high, but we take it here. And if you're not taking profits now, you should be. And we then smash through, take profit. Alright, so in this bearish example, I'm going to show ES and why sometimes if you don't have a bias, that's okay. But as you can see here, we have a 4-hour candle. Now this shows, I believe, the end of this 4-hour candle. So if I show you the next candle, this is what happened from the 10 AM 4-hour candle. So this is where we closed. If I go to the 15-minute, it's okay if you have a neutral bias or you don't, even if you do. But where price is currently located, I will show you on the 15-minute at New York Open. So we'll go to 9:30 open. At 9:30 open, we are above swing highs, and we are also in a bearish fair value gap. So this isn't a place where I would be looking to go long. I'd be looking to go long for example, in this bullish FVG, if price was there, and if it showed our entry function. But it's not. At New York Open, we are here in this bearish FVG and above a swing high. Okay, so we're in New York session now. We've hit buy-side liquidity on a higher time frame. So for us to validate a bearish breaker block, a bearish unicorn, we want to use the lowest down close candle. The lowest down close candle of the before the leg up that took liquidity. This is our stop hunt. The lowest leg down, swing high, swing low, high. So this becomes our lowest down close candle before the leg up, our breaker block. There's only one, so we mark out this down close candle. If there's two, if there's consecutive, you use the consecutive, and that works the same in a bullish example. So we would then want to see a FVG with displacement down. Here we get closure below the breaker block, where that wick is, validating this as we now have an FVG in the breaker block. We can enter this position short, stop goes above the breaker, and target 2R. We get tapped in here. It offers another entry. We can mark out 50% of this fair value gap. We seem to be just respecting it before going lower and going to 2R here. So that's a bearish example, guys. This is really important. So you need to remember, in a bullish breaker, you want to mark out the highest up close candle before the leg down that took the liquidity that created the stop hunt. And in a bearish breaker, it's the opposite. You want the lowest down close candle before the leg up that took the liquidity. When the breaker has a consecutive closes, you use the consecutive candles, guys. That is the most important thing. Alright? I would also mention, if it goes 2R before giving you an entry, I would take your limit orders off. That's just something that I do. So yeah, with that being said, if you found this video insightful, please leave a like, comment, and subscribe to the channel. And check out the Discord. I'll leave a link in the description. Take care, guys. Bye bye.